Now, the best thing about having a pension is not the paycheck, it's having peace of mind. I say that because having guaranteed income alleviates a lot of that anxiety. And by the time that you retire, the way you live your life, how you spend, how you sleep at night is totally different than other people who do not have a pension. Now, if you do not have a pension, do not worry about it. In this particular video, we're going to go over how you can set up a pension like system for yourself. Now, when I'm working with my clients, I see this time and time and again. I can have very similar clients with very similar nest eggs, investment portfolios, net worth. One person may have a pension and the other person does not. Now, the numbers on paper may look very similar, but how they behave, how they operate in their relationship with money, two totally different aspects. The person with a pension, they oftentimes know that that is guaranteed income, and therefore they have this level of confidence that their essentials are going to be taken care of. There's a certain relaxed tone to them and reassurance and level of confidence. Now, the person without a pension, on paper, once again, the numbers look good, but the way they handle money is a little bit more on the conservative side. They know that they have to take RMDs. They know that their investments are at a certain level and they have to do any of those withdrawals. And therefore, that type of behavior is oftentimes matched with a psyche that is like, I have to be pretty conservative. I have to make sure that these numbers actually work and my income is at a certain level so that I can make my savings extend over time. So even though on paper the numbers look very similar, the behavior and the relationship to money is totally different. One can rest assured that there's some guaranteed income that is constantly coming in, and the other person, they have income, but it's not necessarily guaranteed, and there's a little bit more fluctuation in strategy and thought process when it comes to spending. Now, if you see that type of personality, this is what pensions actually do. So, pensions, yes, there's that guaranteed income, but really what people are leaning toward the pension is because it offers them peace of mind. They have that level of insurance, of reassurance, and that's what they want. So, you will see intentionally a lot of people will opt for the government jobs or any type of private company that offers that type of plan because they are planning for retirement and they want that foundation. Now, for those of people who do not have a pension, they tend to treat their retirement like a withdrawal plan. And that's understandable. You have your R&Ds, you have a certain level, a number that every month or every year you're slowly deducting it. There is dependency on the market, and so your returns can go back up, but there's a little bit of fluctuation. But in the back of your mind, you know that money can run out at some point. And so there's this level of fear. Just even the thought of that, that is logical, but even the thought of that can instill some hesitation, some anxiety. Now, if you go to the pension plan, instead of having a withdrawal plan, people with pensions tend to treat their retirement as a paycheck plan. So their viewpoint and their context for their retirement accounts, two totally different ways. Now, here's the reality. The majority of people that you know, and the majority of Americans right now, don't even have pensions. It's just not a thing. It's not really that common. And so, if you are planning for retirement and you want that level of confidence, but it's not necessarily available to you, do not worry about it. And this is why I err on the cash value life insurance and annuity side. Now, a couple things that I need to remind you is one, these are financial strategies in order to supplement your entire retirement portfolio. They are not to be used as accounts where you move all of your money in here. No. General rule of thumb, you should have 7 sources of income at any given time because if one source of income falls, you have 6 other sources of income in order to replace and assist you in your cost of living. Now, where cash value life insurance policies and annuities fall into the whole matrix of your retirement portfolio is with cash value life insurance policies, there's going to be 2 numbers. There's going to be the death benefit, it's a lump sum of money that gets passed on to your beneficiaries, and there's going to be the cash value component that operates just like a high interest yield savings account. So as both numbers grow, oftentimes retirees will intentionally make not withdrawals, borrow against the policy and use that income as part of the retirement income. All the while, both numbers continue to grow. Annuities operate similar to a pension where, as long as it's properly structured, like cash value life insurance policy, as long as it's properly structured and funded, then that can guarantee you income for the duration of your retirement as well. So, if you do not have a pension, you can create pension like systems that will supplement your retirement portfolio. And so that will assist you in gaining the confidence and the peace of mind other people have. So, not a bad idea. And again, when you're taking a step back, you do want to diversify all of your accounts in your portfolio because, again, you want to make sure that you're minimizing risk of ever running out of money during your retirement years. One caveat, and one important caveat that you need to remember is both cash value life insurance and annuities are not get rich quickly strategies. They are not. They are, think of, they fall under the world of insurance. Think about that for a second. So consider both of them as insurance for your retirement portfolio. They don't operate and they don't get taxed similar to your other investments. Let's say you hold rental properties. Let's say you have a majority of your money in brokerage accounts, 401ks, Roth IRAs, IRAs. Maybe you have other investments that get taxed as investments. Cash value life insurance policies and annuities do not get taxed the same as other investments. So, mindset, you will want to take a look at these two financial products as supplements, knowing they get taxed differently, knowing that the purpose of both of them is going to be totally different than your other investments in your portfolio. And that said, going back to diversification, you got all different levels and all different considerations taken care of. So they are not get rich. They do serve as supplements and reassurance that you're not going to run out of money. Now, two objections I want to address. Oftentimes I will say, or oftentimes I will hear, well, why would I do that in cash value life insurance and annuities? I can put my money in elsewhere and get higher returns. You should. I am arguing for diversification and risk management. So, two totally different goals, two totally different purposes. When you retire, you can't necessarily retire on percentage growth on your investments. It's a great thing to see and have it reflected when you check your accounts. But really, at the end of the day, you're not living off of percentages. You're living on the actual paycheck. So again, you have to assess, where are you in life? Where are you in retirement planning, and what's really important to you? Go back into the mindset of those with pensions. They oftentimes have these specific clients lean toward the pension strategy because they wanted that level of confidence and that foundation and that reassurance. Again, it's not available. So if that is something that really is akin to where you are at in life and that's part of your goals, you may want to consider setting up a similar structure for yourself. Now, the second objection is oftentimes I will hear, well, pensions don't keep up with inflation. Honestly, some do and some don't. You do want to check in with your previous employer or provider who is offering you that pension, who you have that contract with. Some of them do, and some of them have what's called COLA, which is cost of living adjustments. Oftentimes, if you're in the federal type of job, they often do. Now, when we're talking about the actual amount of the pension checks, they may or may not be suitable for your cost of living at this point in time or where you live. So again, retirement ends up being this large calculation of like, hey, how much income do you have and does it sustain you? General rule of thumb. Pension paychecks cover the essentials. They can probably just enough to cover some food. They can probably some housing expenses, some utilities. Okay, they're foundational. So yes, you are correct. Where the money that you get can probably be larger if you have other investments like rental properties or businesses. But again, let's go back to two different purposes. You want that foundation. You want that guaranteed income. It may or may not be, you may not be living lavishly off a pension. It just really depends on what job that you had and how many years you put in. But again, you want to make sure that you're in the right mindset when we're talking about guaranteed income, whether it be pensions or Social Security or cash value life insurance or annuities. Those are more foundational tools that will cover your basics and your essentials so that you can have the freedom to play around with the other sources of income that you're getting from your investments. So think of it kind of like a pyramid. Every single financial product will serve a different purpose. And with that analogy of a pyramid, think of your investment portfolio as a pyramid. If you have a pension, you have that peace of mind and you got that foundation, that strong foundation under your belt. Now, if you do not, you do want to set up a system that is very similar, that again has the same goal in mind, which is guaranteed income in your retirement. Use that as your foundation. And then look at the other aspects of your investment portfolio and start building up. You want that reassurance because, again, people who have pensions tend to live a little bit differently during retirement. So that said, as you're building up your portfolio, you have your intermediate financial products, and then you have your top, which is going to be your most luxurious and your financial freedom. And on that note, if you have any questions on this strategy and how you can achieve peace of mind and really feel that freedom when it comes to your finances, go ahead and click the link below. I offer you a free guide on how you can achieve financial freedom.